We bought it, the price crashed, so we doubled down after the dip. We got 175 million. There's a million good ideas, and it could be a multi-trillion-dollar economy, and lots of money will be made. If you have a stock and you cannot sell it, and everybody wants to buy it, the price goes up. And if you have a security and you're willing to sell $2 billion of it, and the average trading volume is 100 million a day, and you're ready to sell $2 billion of it, the price is not likely to double or triple, right? Because you're making the market. And a good idea is something that could 10 to 100x its money. The world's full of hedge fund guys that created diversified portfolios, and their pitch was, no one decision we make is going to bankrupt you, so give us all your money. And the winner is Bitcoin and the crypto economy, right? Because we're funding the crypto economy. Our shareholders are winning. We're winning. The investors are winning. But we're just disrupting the traditional credit markets.
As Bitcoin sits down over 15% and the recent crash leaves investors uneasy, the crypto market remains in limbo. Today, Bitcoin bull Michael Saylor shares his take on the market, explaining why he believes Bitcoin is being manipulated and how he's preparing for potential volatility in the coming days and weeks. Saylor points out that major Wall Street firms and institutional investors, including billion-dollar players, are making significant moves driven by fear and uncertainty. He suggests that some of these buyers may have agendas not immediately obvious to the public, signaling a potential market shakeup soon. Major institutions like BlackRock have added sizable crypto positions, and the world's largest asset manager, putting its $10 trillion weight behind digital assets, has intensified Wall Street's fear of missing out. Over the past month, Bitcoin has fallen nearly 13%, and with the government shutdown ending, investors are watching closely for Trump's plans to reinvigorate the economy. Saylor's insights provide a window into what could be the next major shift in the crypto cycle, offering guidance on where Bitcoin may head next.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
Yeah, my opinion on all the proof-of-stake networks, Solana, BNB, Ethereum, the like, is the digital assets economy is bifurcated. There's two sides to it. One side is based on proof of work. It's digital capital. Bitcoin is the king. There's a dozen other proof of work networks. There's a negotiation between the House and the Senate and the administration and the industry, and there will be a law, and the law will provide clarity on 70% of these ideas, and there will be obscurity on 30% of the ideas. And, you know, will Solana defeat BNB or Ethereum, or will they all coexist? And what? It's a technology competition, a regulatory competition, a marketing competition, a stability and a finance competition. And if you're going to be invested in that market, you need to actually spend a lot of time to form an opinion on all those things. I'm not going to tell you who's going to win or lose any more than if you were to ask me who wins the AI race. Is it OpenAI or Gemini or whatever? I'd be like, it's all very promising. Someone's going to win.
Somebody's going to lose.
The world is going to be a better off place with digital finance and digital intelligence. But, you know, at the end of the day, if you want my investment suggestion,
please.
You either buy digital capital in the form of Bitcoin and hold it for 10 years because you trust nobody. Or you buy digital credit from an issuer that you trust. And if you don't trust anybody, buy Bitcoin. They're selling you stuff that pays you 5% taxable. Okay, well, so there's $300 trillion of that garbage. Okay, and we're creating something which is 10% tax deferred. You know, so it's better, four times better than what the conventional world has. But the winner is the investor, the public investor, the consumer, small business. And the winner is the issuer. And so I would say we reached the low point in entrepreneurism and capital markets. Like, you know, we're 10x over collateralized on Bitcoin. You plug in the price of Bitcoin, the volatility of Bitcoin, your forecast of Bitcoin. It spits out statistically what is the risk of being under collateralized over the term of the instrument. The crypto movement was the opposite. The crypto movement is, hey, why can't I just launch a token in 4 hours for $40?
Right.
And so if you look at it, you say, there's 40 million companies in the US, but there's only 0.01% of them that can access the capital markets. It's too risky and it's not worth it. the company says, from time to time over the next 3 years, we may sell equity. And if the equity is trading strong in the market, you can go and sell $1 million of it, maybe 10 million, maybe 100 million. We had days where we sold $1 billion of it. We sold $1 billion of stock. We take the billion, and then you do something with it. You can invest it in real estate. You could buy gold with it.
In your case,
bought Bitcoin with it.
You were buying Bitcoin.
Okay, so we didn't know about that. And it's not something that a normal, well-run company would ever care about. Right. They don't have a use of proceeds.
Right.
Bitcoin is digital gold, dividend-bearing securities backed by digital gold, right? That's that business. That is what I'm in. That's strategy. That's Bitcoin. Now, the other half of the business is digital finance. Digital finance is tokenizing your currency, like stablecoin. Tokenizing dollars, tokenizing real-world assets, tokenized gold, tokenizing securities like bonds, tokenizing stocks, tokenizing Stretch, tokenizing MSTR. When I move stablecoin between, my Android phone and your iPhone on Saturday afternoon, it's Tether. Tether is tokenized dollars, right? It's the ability to move a token that represents a bar of an ounce of gold or a dollar bill or a share of Apple stock. Or it's some kind of capital fundraiser, Joe Rogan coin or Trump meme coin, right? Those proof-of-stake networks, they exist to let you move tokenized currency, tokenized brands, tokenized securities, tokenized real-world assets around. Call it digital finance. It's a vibrant economy. It's fraught with controversy. So there are some people that think that, you ought to be able to issue digital tokens rapidly, and other people don't think you should. And then there are some people that want to move money at the speed of light, and other people want to KYC it, and they fight over that. And there are some people that want to sell digitized securities to the world, and other people don't want them to travel to Pakistan or the UK. And so you've got an army of lawyers that are debating this stuff. And the bill that's moving through Congress right now, called Clarity Act, is meant to provide some bright lines around what you can do with digital tokens on digital exchanges with these digital finance networks. And right now we're in the gray zone.
With unwavering confidence in Bitcoin, Saylor and Lee foresee explosive growth on the horizon. As institutions like BlackRock make major moves, they stress that a long-anticipated surge is coming. By the end of 2025, there could be 1.1 billion active crypto wallets, marking the fastest wealth accumulation in history. After a career of research, their conclusion is clear. Liquidity drives everything, and crypto is set to be the best-performing asset of all.
We bought it, the price crashed, we got 175 million, and we went and we bought the next tranche at 10,200 or 10,300. So we doubled down after the dip, and then it turns around, flies through 12,000, runs to all-time highs of 19,000. The stock 10x's.
Yeah.
All the stock options get exercised. We get another wall of money. We buy another $50 million. Bitcoin is the greatest digital commodity. And so Bitcoin gives you a 50% ARR for the past 5 years. So it's triple gold, triple the S&P. So if I can beat the cost of capital, and if I can do it with a commodity, I can capitalize a publicly traded company 100% on that new asset. I can even lever it. I can go to 150%. Okay? And so the revolutionary paradigm shift here, right? The big innovation was take a 100-year-old structure, public companies in the United States, introduce a digital commodity that you can, and recapitalize the company on a digital commodity. If you take a company with $1 billion of real estate and you can bolt on 500 million of Bitcoin, it's all of a sudden got a dynamo. If you bolt on $1 billion of Bitcoin, right, now you've got a digital real estate company. You take that public, and that's going to have a lot more liquidity, a lot more volatility. Now you can sell a convertible bond, and you can use the convertible bond proceeds to finance whatever you want inside the company. So you get cheap cost of capital, right? The cost of capital is set by the S&P index. It's about 14%. So if I sell my equity and I buy the money market instrument, then I'm getting a minus 12% yield. So I'm burning 12% of my capital. That means that if I've got $1 billion in cash and I invest in treasury bills, I get 2%, but I might as well just give it back to the shareholders because they expect to get 14%, right? So conventional corporate finance wisdom
Buy the stock.
is you either dividend out your cash flows to your shareholders or you buy your stock back. And the most tax efficient thing to do is buy the stock back, right? So I have billions of dollars. I buy my own stock back. I surrender the capital to the shareholders. I create more leverage on the equity. The earnings per share is going up because the per share count is going down, right? Mm-hmm. That is conventional wisdom. 99% of all companies, maybe 99.9% of all companies just do that. The only company that you know of that doesn't do that is Berkshire Hathaway, right? Warren Buffett says we're not going to dividend out the cash. We're not going to buy the stock back. We're going to invest the capital because I think I can do a better job. And so that's why they have the largest treasury of any public company, because that was his practice for 30 years. But no one else wanted to do that. Everybody else will brag about the fact that they buy the stock back or they dividend it. The cost of capital, the hurdle rate is 14%. It's the S&P index. So for the last 100 years, the cost of capital has been generally set by the S&P 500 index. So an equity investor would say, if you're beating the S&P index, you're beating my hurdle rate, you're a winner. And if you're underperforming the S&P index, I could have just bought the S&P index and gone to sleep for a year. And so the issue is, okay, I've got $100 billion because I'm making Microsoft or Apple. Why don't you just buy the S&P index? And there's a simple answer to that, because following the SEC Act of 1933, you had a lot of companies, the Morgan Interest, and they were trust companies, and they owned a bunch of they owned each other's shares. So I would create a company that would then own the shares in 10 other companies. And then this company would own my shares. And then this company would own the shares of my subsidiary. And you had all these interlocking trusts and interlocking companies. If we have $1 billion of Bitcoin and the company's worth $2 billion in equity value, we just sell the equity, $1 of equity. We buy back the Bitcoin, and we capture 50 cents of profit on the round trip transaction. So you could sell $10 million.
The stock's $1.
The stock's $1, and the company owns 50 cents a share worth of Bitcoin.
Got it.
So I sell the stock for $1, and I buy back $1 of Bitcoin.
Is that how you come up with your BTC yield? That's what you talk about, the yield.
Yeah.
For a long time, I'm like, what yield is he talking about?
If you have $1 billion of Bitcoin, and then you sell stock, $1 billion of stock backed by 50 cents a share of Bitcoin. If you sell the stock at MNAV of 2, then you're going to sell $1 billion of stock backed by 500 million of Bitcoin, buy back $1 billion of Bitcoin, capture a $500 million gain. You captured a $500 million gain on $1 billion of Bitcoin. You've just generated a BTC yield of 50%. You see, you got a 50% tax-free dividend by simply selling the appreciated stock, buying back the underlying asset. So the BTC yield's a function of how much of that can you do versus your balance sheet.
In this environment, Bitcoin stands out as an alternative, insulated from the manipulations of traditional finance. Saylor notes that major corporations like Apple, Amazon, and Google can leverage decades of established relationships to quickly acquire significant Bitcoin through spot ETFs, bypassing the cumbersome process of buying the actual asset. This highlights the transformative potential of cryptocurrencies within conventional financial systems. Saylor emphasizes the importance of embracing digital currencies as the economic landscape shifts and encourages investors to use Bitcoin to secure a stronger financial future. How do you see Bitcoin's trajectory shaping the crypto market and the broader investing world in the coming months? Share your thoughts below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.